Hi, I'm Ann Garcia. As the college financial lady and author of How to Pay for College, I've helped thousands of families save millions of dollars on college. Today, I'm going to talk about getting ready to file the new FAFSA, the one that comes out December 31st of 2023, which is for the 2024-25 school year. This is the one that you are filing if your student will graduate high school with the class of 2024 and go on to college right away. So let's start with some basics. First, and really most important, even though the FAFSA is available December 31st, that doesn't mean you have to file it on December 31st. That's especially true this year because colleges won't receive your data for a few weeks until late January anyway. That means you have some time to prepare for it and choose the best date for you to file. This year's FAFSA will use your 2022 income from your tax return and your assets as of the date that you file it. So let's turn to some housekeeping and some things you can do to get ready to file the FAFSA. First, both students and parents need an FSA ID. You can create this on the Federal Student Aid website, which is studentaid.gov. If you filed the FAFSA previously, you use your existing FSA ID. But your FSA ID, if you're making a new one, it's not generated immediately. So if you don't have one yet, go to studentaid.gov right now and create one as soon as you finish this video. Next, let's do an inventory of your assets because that's the one piece of what gets filed in the FAFSA that you have to manually report and that you have some opportunities to plan for, even though the FAFSA comes out right away. The FAFSA asks about three groups of assets for both the student and the parent. First is the current total of cash, savings, and checking accounts, so basically your bank accounts. Next is the current net worth of business and investment farms. So if you're a business owner or own a farm, you'll be required to report its value. And finally, the current net worth of investments, including real estate. So now is a great time to pull together the info that you'll need to answer those questions so that your FAFSA filing goes smoothly. For most students, this is pretty straightforward. It's what's in their bank account. But a student with any kind of investment account, whether it's a UTMA account, a Robinhood account, crypto, a trust for which they're the beneficiary, any of those assets also get included in the current net worth of their investments. Now, students who have a lot of money in their bank account might consider moving it to a couple of better options. If any of that money is specifically for college, they can deposit it in their 529 account. This changes that asset from a student asset, which is assessed at 20% of its value, to a parent asset, which is assessed at 5.64% of its value. It also makes sure if that money is really supposed to be there for college, that it's much more likely to actually still be there and be available when they file. Money that's in your student's bank account is assessed again at 20% of its value compared with 5.64% of its value if it's in your 529. So that means if your student has $1,000 in their bank account, it's going to add $200 to their student aid index. If that $1,000 is in their 529, it only adds $56 to their student aid index. In addition, students whose money is earned from a job can contribute that money to a Roth IRA. Retirement assets, including 401ks, 403bs, and IRAs, whether traditional or Roth, are not included in assets on the FAFSA. So contributing that money to a Roth IRA completely removes it from the student's FAFSA and their student aid index. Parent assets can be a little bit more complicated. One important point, again, is that since assets are valued on the date that you file, it's worth looking at when your big bills are due, things like your mortgage or your rent or your credit card bill, so that you can file the FAFSA after you pay those bills. That'll reduce the amount of money that you're including in your bank accounts. So for example, if you pay your mortgage on the 5th of the month and your credit card on the 7th, wait till the 8th to file the FAFSA since your bank account balance will probably be a bit lower. The next piece of assets is the current net worth of business or investment farms. So it used to be that only large businesses were included on the FAFSA. Now businesses of all sizes will be included. The good news is the rate is the value of the business is assessed at an adjusted rate. But you will enter in your FAFSA the net value of the business, which means you subtract any liabilities from the value of the business. Liabilities include any mortgage or other outstanding debts, current liabilities, including the coming year's payroll and other expenses. All of those get subtracted from the value of the business. In addition, businesses that are or farms that are partnerships or that have multiple owners might have provisions around selling that would reduce their value in the general market, and those can also be factored into the value that you give your business. My recommendation with valuing your business is that however you come up with that value, just make a note of it somewhere. That way, if your FAFSA is reviewed by the college and you're asked to provide more information, you can explain how you came up with that number. Now, the third piece of assets is investments. There are a number of things that are included in investments. First of all, any taxable investment accounts, such as brokerage accounts, that would be vested stock options or RSUs or ESPP shares, second homes or investment properties. As with businesses, these are assessed at their net value, so market value minus liabilities. The student's 529 account balance is included, as is any trust for which you are the beneficiary. A few things are not included in investments. Your retirement accounts, including employer plans like 401ks and 403bs, and then also traditional and Roth IRAs. The student's siblings' 529 accounts are also no longer included as assets in the FAFSA, and the value of your primary home is also not included. Parent assets aren't worth a lot in the formula. They're only 5.64%, but they are the one area where you still have some wiggle room to bring down your student aid index. Beyond just looking at due dates for your bills, here are a few things you might consider before filing the FAFSA. First, make Roth IRA contributions. After January 1st, you can make your 2024 contributions in addition to your 2023 contributions. For 2023, you can contribute $6,500 per parent if you're under age 50, or $7,500 per parent if you're over age 50. In 2024, those numbers go up by $500. So two parents who are both over 50 could contribute $15,000 for 2023 and $16,000 for 2024 to Roth IRAs prior to filing the FAFSA if they're trying to get some cash out of their bank account. You can also make contributions to the student's siblings' 529s because those account balances are excluded from the FAFSA formula now. And then finally, if you receive any kind of equity compensation, whether it's stock options, RSUs, or ESPP, check when your next vesting date is so that you can file prior to receiving those additional shares, since those are counted and tend to be bigger numbers. Now, income is the other piece of the FAFSA, and again, it's also for students and for parents. It is solely the income on your 2022 tax return, and you'll transfer that data directly from the IRS to the FAFSA. However, you'll want to have your tax return handy because there are a few items on your tax return that you might actually have to report there. The big one is any IRA or 401k rollover that's reported on your tax return. The FAFSA includes IRA distributions as income, whether they're taxed or untaxed. But if it's a rollover, you get to subtract it. So check lines 4 and 5 of your 1040 before filing the FAFSA to see if this applies to you. So that's your checklist of things to do before you file the FAFSA. Remember that financial aid is allocated by the colleges themselves, and the colleges won't receive your FAFSA information for a few more weeks. That means that for most families, it's not imperative to file immediately, and in fact, it's usually more beneficial to give yourself some time to do the things that I've outlined here. Who should file as quickly as possible? It's a small group. It's people who are eligible for any kind of financial aid that's awarded on a first-come, first-served basis. That includes some state grants and a small number of colleges that award financial aid on a first-come, first-served basis. Everyone else can wait and figure out the best date to file. If you found this video helpful, please like it and subscribe to my channel. If you're looking for more college planning information, grab a copy of my book, How to Pay for College, which is available from Amazon, Barnes & Noble, and bookstores everywhere. Or head over to my website, howtopayforcollege.com, and check out my College Financial Plan Masterclass. Use the discount code on the screen to get 10% off the class. I'm Ann Garcia, the College Financial Lady and author of How to Pay for College. Thank you for watching.